Talk about a bloodbath. I don't know where to start. We had the NASDAQ down over 1,000 points this morning. I don't think that, I have to go back and check, but I don't think the NASDAQ has ever been down 1,000 points. I think that might have been a unique feat this morning. NASDAQ was down 6% at one point. Bitcoin below 50,000 this morning, I saw. The VIX went up more than 100%. At one point, the VIX was up 143%. The VIX, of course, is the fear gauge. I took a look at the long-term chart of the VIX, and it hit 65 today. 65 today. The last time it got that extreme was obviously right at the beginning of the COVID shutdown. There's going to be lots and lots of screaming for emergency rate cuts. We are already seeing the market price in upwards of 100 basis points in cuts. But what I would ask you to do is step back. And in my opinion, an emergency rate cut would be the worst thing for the market. An emergency rate cut would signal panic by the Fed. Yes, this morning and Friday have been bad. But if you zoom out, it's not terrible. And again, we have started to trip recession gauges. Obviously, we talked about the Psalm rule. Well, we got another one this morning. The yield curve uninverted. The 2 and 10s uninverted. I don't know if it's currently, it was really bouncing around the 0 line. But at one point this morning, the yield curve has uninverted. All of these things are historically recession indicators. Again, folks, we've survived many, many recessions. We've survived a global financial crisis, a dot-com bubble. We will also survive this. The things that I would tell you on a day like this is, first, let's just be honest, days like today are why I am not a stock market investor. There are plenty of you, and some of you watching, have the ability to stare in the face of this collapse and go buying, go shopping. I was a very emotional trader and hence was not good at this. The dot-com era really, really hurt me. That is one of the reasons I like real estate. I like real estate. It is hard to panic sell real estate. It is also an asset where you can get really good and find and create value. The other thing that is likely going on today is mortgage rates. Mortgage rates will hit a 1-year low. That is my guess. We'll find out after lunch today. But yes, there is a lot of things going on, a lot of pain out there. Hopefully you're doing okay. You didn't get liquidated. I heard Tom Lee say this morning that potentially hundreds of thousands of crypto accounts were margin called to zero because of the significant move in Bitcoin and Ethereum. I mean, Ethereum, I think, was down 20% at one point. So pretty wild. Jeremy Siegel is leading the charge this morning. The Fed needs to make an emergency rate cut. It needs to cut 75 basis points today, and it needs to signal that another 75 basis points could come next month. Folks, again, that would be a disaster, in my opinion. If the Fed signaled that, a 3, 4, 5% move in the stock market was enough to yank them off the side, that would actually lead to more selling and more fear. Citigroup and JP Morgan calling for 50 basis points in September. Again, folks, we are going to have the market just trying to pull the Fed into cutting rates in September. Fed President Goolsbee was interviewed this morning, CNBC, and President Goolsbee said, there's really 2 questions I think were interesting this morning. Could a stock market crash cause a recession? He was asked that question, to which Fed President Goolsbee said, do you mean like 2001? So yes, if the stock market crashed hard enough and took down enough of the stock market wealth, it could cause a recession, a la 2001. Is the AI bubble like the dot-com bubble? This is only my opinion. It is my opinion, having invested through it. The dot-com bubble was a lot broader, right? We had hundreds, if not thousands of companies just throw a .com on their name and get crazy valuations. The AI bubble has been massive, but it is also very concentrated, right? Think NVIDIA and Taiwan Semi, and it's a very concentrated bet. So hey, if NVIDIA goes down 20%, AMD, all these others, is that big enough? I don't know. You tell me. Again, the Fed Watch tool I just checked this morning is calling for 6 rate cuts by January. That's 150 basis points. It's just a time to take a deep breath and realize again that if the Fed had to be forced into action today or this week, that would be worse. So what is really going on? You probably have heard or will hear over the next week something talking about the great unwinding. Maybe you'll hear it called the carry trade. Now, in very simple, maybe 10,000 foot, this is essentially what I believe they mean by carry trade. So Japan has had rates artificially low for a long time. And the carry trade basically says go borrow currency from a low rate provider like Japan and invest those cash or those yen in a market with higher appreciation. Now, obviously, Japan has started raising rates and talking tough. So that trade is being unwound. And in this currency world, I don't know if you know this, but the currency world is much bigger than the stock market. It is massive. So little moves could have a huge effect, and it would not shock me. It would not shock me at all if we don't learn that a couple of hedge funds have gone to zero because they were on the wrong side of this carry trade. You have seen indiscriminate selling, and that means somebody is trying to raise capital to plug a hole, in my opinion. Let's talk about real estate a little bit because, again, I think what you are about to see is a refi boom. If you are in the mortgage industry, I want to hear from you. Let me know in the comments below. If you are in the mortgage industry, have you gotten more phone calls in the last 72 hours about potentially starting a refi, perhaps getting quotes? Now, let's be very clear. I don't believe what is currently going on right now is going to lead to a wave of home purchases. I still believe the second half of the year will be slow, probably below 4 million. However, refis, FHA streamline, VA streamline, I would suspect that we will see a boom in refinancing transactions. So if you're in the brokerage industry, let me know in the comments. I'd love to hear if your phone has been ringing off the hook because, again, I think rates by the end of the day will be at a 1-year low and potentially going even lower. Want to let you know about our school community. They had their Sunday accountability group. You have to join school. It was an hour and 45 minutes. They talked about rates, knob and tube wiring. Again, you've probably heard about knob and tube wiring. What is it? How do you fix it? What's it cost? They talked about dampening floor, soundproofing a floor, attic firewalls, combining lots, etc. Lots of really in the weeds conversation. Again, our community is well over 200 members now, all different skills, experience levels. Bring your questions to the group. There's a Wednesday and a Sunday accountability group. So get in the right rooms. Get around the communities that are doing it. Also, I want to give a special shout out to Stacy. Stacy, one of our school members, was interviewed yesterday, talked about how she read Rich Dad, Poor Dad, and that started a journey to owning rentals. So shout out Stacy for being interviewed and sharing her amazing story. Mother of 3, eBay flipper, now landlord. One thing that was interesting in that conversation was she's been on eBay Flipper for 17 years. Basically, she buys pallets of stuff, she breaks it down and sells it on eBay. 17 years. She indicated during that interview that something happened in May. Basically, her indication was the economy is slowing. She went from selling, X to selling X and a half, right? Cut it in half. So I'm curious, if anybody else is out there in the retail space, did you see a similar slowdown in May, i.e. perhaps this recession call that we have been waiting for maybe is actually out there? Again, we've talked about the wealth effect before. Let's talk about the reverse, right? The reverse or negative wealth effect. What is the wealth effect? Basically, it means the richer you feel, the more you will spend, essentially. However, on days like today that are scary, you will see actually a reverse of that, a negative wealth effect, where you were maybe going to go on a trip, or you were maybe going to buy a car, or maybe this, maybe that. Because your portfolio or your 401k or your crypto wallet or whatever you have, that gets cut in, goes down 10%, you are less likely to spend. So again, my thesis for the second half of the year stands. The recession will be backdated to June or July. I believe the real estate industry is going to be very slow for home purchases or transactions through the end of the year. I believe rates will trend down. I do believe they will have a refinance boom. So good news if you're in the mortgage broker industry. It's been a long time waiting for something to go your way. Congrats, you have that. And then lastly, let's talk about inventory. It looks like active inventory in real estate went up about 6,500 listings. Last year we were at 488K. We are now at 683. Inventory, rough and tough, is up 40%. New listings for the week were 67,000. Last year were 60,000. So we were up about, call it 10, 11% on new listings. So folks, it is going to be a wild day. Again, it's okay. Zoom out. Remember, days like this happen. Also, special shout out to Dan Bird, who took a special look at the Psalm rule and said, hey, the last time the Psalm rule triggered in, I think it was April of 01 and something in 08, from peak to bottom was somewhere between 6 and 10 months. So this could be a journey. It won't obviously be straight down, but it will be a journey. So folks, I think what I'll do, because my 8 a.m. canceled this morning, what I'm going to do is we'll do an 8 a.m. live stream, just talk, answer questions. Hopefully you join me there. Bring your questions. I'll talk to you in about 15 minutes. Take care. Later.